Good evening, dear students. I hope your paper went well, and if you have written the current June 24 examination, I request you to stop this video, go back to your studies, and prepare for the next paper. And today in this video, we will be reviewing the CA Foundation accounting paper. At the first glance, it looks like an average paper. Most of the questions were given as it is from the study material with some minor modifications. And I have received messages from a lot of students that their paper went actually really well. So we are reviewing the CA Foundation accounting paper which was conducted today. Now, as usual, the first question is state with reasons whether the following statements are true or false. Very simple. The first one says if closing stock appears in the trial balance, it does not enter in trading account. It is only shown in the balance sheet. So all of us know if closing stock is given in the trial balance, then it will come only in the balance sheet. Same way, there are some questions on true and false on error of principle. Accounting standards can override the statute. Always remember, law is supreme. The accounting standards cannot override the law. Then question on promissory note, and then all errors are rectified by means of journal entries. Now this is a very simple thing where we have done in the classes as well, that some of the errors are rectified without passing journal entries as well. And then revaluation account is also known as profit and loss adjustment account. In some cases that is done. So very simple, 6 questions, and if you have done it reasonably well, around 7 to 8 marks can be expected from here. Then theory question on accounting policy, cash basis of accounting, and going concern concept. Again, very simple. Then entries with related to GST in the books of account. Now this is again similar to the question which is there in the study material, have been done in the classes as well. 4 marks straight away in your pocket, right? Then a question on the rectification of error, and most of the questions here, if you see on the rectification of errors, you would find similar errors related question in the study material as well. For example, sales return book has been casted short. Then freight paid, installation of machine 6,500, posted to freight account as 5,600. So 2 types of error. One is the numbers have changed. Second is the account has changed. So that is also simple rectification. Then goods returned by customer entered in sales book and therefrom posted to the credit of his account. So when sales return happen, it will be posted to credit of the account, but they are posted in the sales day book. Then it means the sales account could have gone wrong, right? Same way, a lot of these, if you see, most of the rectification part are straightforward, nothing complicated. 1 or 2 of these you may find it complicated, but as I have been telling earlier as well, out of this 12 marks you can easily target 8 to 10 marks, right? Because you get step by step marking. Then the next one on machinery accounting, again similar questions are there in the study material, just that some numbers have been changed and you can solve it directly. Now this one, I would say the question based on non-profit organization, this is a bonus question. There is no complication. A simple receipts and payment account, a simple detail of other liabilities and balance sheet, then some missing information if at all we are required to find, and then they have given the closing information by charging depreciation 10%, 15%. All of these things, these are the ones which we have done in the classes as well. It's given in the study material as well. If you have done it, you would be able to score 10 to 12 marks in this. Now the most surprising thing in this question paper was 2 questions from partnership account. Now who could have expected it? And both the questions again similar to the one in the study material, and simpler thing which you could use and apply whatever you have done and solve the question. So here we have partners PQR sharing profit and losses in 3:2:1 ratio. They have decided to dissolve. Dissolve means the businesses come to the end and we will prepare realization account to close the books. Then we have this employee provident fund, and against that if there is some liability we need to check. We have unrecorded investment. This is purely a gain. So you will credit realization, debit bank account. Creditors have agreed to take over the furniture at of book value 25,000 at 24,000. So 24,000 paid by furniture, balance were paid at a discount of 5%. So only the balance amount will come in the realization account. Then 9,000 bad debt, remaining amount whatever you have realized that will come in the realization account. Then you have other assets land, building, machinery, furniture, whatever has been realized, that is P has taken over for 75,000. So what you will do, from the total furniture, part has been taken by a particular creditor. 75,000 you will debit the partner account, credit the realization account. Same way stock, whatever you have realized by bank, in the realization account. Expenses on dissolution, 18,700, you will show it on the debit side of realization. Outstanding bill, 3,500, you will record. Now employees provident fund, nothing has been given. So this fund, you can either transfer it to realization account, from there it will become a gain and go to the partner's capital account, or from here itself you can directly transfer to the partner's capital account. Right, apart from that, there is no complexity in this particular question. 8 marks question, you should be able to score 8 out of 8. Then one more question on partnership. Again, this question is similar to the ones which is given in the study material, where the amount of goodwill has to be calculated based on the profits. Now here if you see 87,000, 1,06,000, 1,22,000, you can see a clear increasing trend. So you will calculate weighted average profit and calculate the goodwill, right? And nowadays they have started giving in the question that goodwill will not be withdrawn by the partners, goodwill will not appear in the books of account. All of these things are again solved in the class as well, so you could have easily done it. Then valuation of investments and all are given, and you are required to prepare realization account, partners capital and the balance sheet. Now tell me one thing, 12 plus 8, 20 marks of partnership accounting question, and both of them highly scoring. So that is what makes this paper average paper. I understand it can be lengthy, but it is an average paper. Then we have a question on single entry system, where details of the balance sheet as in 31st March 23 has been given, summary of cash book has been given for the next period, and some information has been given, simple information. Based on that you can easily prepare the trading P&L and the balance sheet. Then a slightly lengthy question on inventory valuation. Okay, again nothing to be worried about or nothing complex in this, but it is slightly lengthy given it was only asked for 5 marks. Then attempt any one of the two parts. One was for preparation of manufacturing account. So from here you have to identify what are those items that will come to the manufacturing account and what are those items which will not come to manufacturing account, and here and prepare the manufacturing account. Then bank reconciliation, straightforward. Out of 5 marks, question is slightly lengthy, but out of 5 marks, because the numbers are straightforward, the adjustments are straightforward, you would be able to do that as well. Then the balance sheet of Happy Limited is given, and
it's 7:30.
And then there is a final call on the existing shares. Then they have decided to forfeit some shares, reissue some shares, and again bonus share, and bonus share has been issued by utilizing the minimum P&L balance. So here what you need to do is slightly advanced question, I would say this one, given you are at say foundation level. So what you need to do, you need to first make the calls, you need to make the calls fully paid, then you make the share forfeiture account, right? And then you will have some capital reserve coming from share forfeiture account. Then what you will do, you will utilize capital reserve, capital redemption reserve, securities premium, general reserve, and if at all something is required, you will use the P&L account. Slightly complicated, I would say, given at the foundation level. So in this particular question where we were talking about this question number, I think question number is cut off, but yes, so after B, this one is C, and this is for 10 marks. For a 10 mark question, slightly lengthy question is what I would say. Then another question, this one is on your preference shares redemption. Simple question, there is again nothing complicated in this. We have discussed clearly in the class as to what should be the capital redemption reserve, how should we check the bank balance and all of those things, and that is again a simple question. And then advantages of subsidiary book. So overall, if you see, other than the company accounts question which appear to be slightly complicated, remaining were manageable. And if you have attempted 85-90 marks in this particular paper, you can easily expect 60 to 65 marks if you have done things properly. Especially I like the bonus questions on partnership, which was highly scoring, very highly scoring, and also NPO was highly scoring. Do let me know in the comments, how was your paper, what difficulties did you face, and how did it overall go as an overall paper. Do you find it average, easy, difficult? Do let me know in the comments. Thank you.